Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We've seen a record for the Dow Jones Industrial Average today, plenty of up arrows. And it's time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts, here to take us through the trades. Charles Moon, Senior Market Strategist, Equities at Prosper Trading Academy. Great to see you both. Charles, before we get to some of your picks and movers here today, we had a conversation with Jay Hadfield, who was talking about the rally being sort of based on yields coming down. Yesterday, there was a lot of talk about election season and some clarity, and maybe that helping the market along. What say you?
Yeah, 100% about yields and 100% about, rate cuts as well. Right now, SEP is being priced nearly at 100% for the first cut. There's some demand, very little for July. I think the Fed is pinned where they have to make this move, and there's a possibility that, if they start in SEP, that we still have the idea of potentially three, more likely two. But, the market is certainly embracing that idea. They're certainly embracing the idea of longer term yields starting to come down. We've seen the auctions be a little bit more favorable as well. And that's really been that guidance over the last month. And this market has been really, really strong, led by the NASDAQ initially, now being led by the Dow and the Russell. The Russell has been on a vertical ascension over these last 3 days. And I mean, we're just seeing, the broad jump. And when we see the markets broadly jumping like this is just a runaway train to the upside. I don't see us slowing down anytime soon.
So definitely more positive than negative here. Yesterday, we saw the Trump trade here on DJT jumping. It was up about 30%. It's pulling back today to the tune of about 8%, 9%. But it has been a winner. This month of July, it's up 18%. So certainly, I think volatility is a good way to describe the same. Tell me a little bit about how you're thinking about trading this.
Yeah, usually when you see stocks make these overnight jumps, at one point it was up over 70% in pre-market trading yesterday. You got to just anticipate the risk-off move. And for me, this is going to be a great buy entry, pulling back towards a very critical technical level, the 200-day moving average. That's where it was stuck underneath until it exploded above. Obviously, the events over the weekend was a major catalyst for this. And for me, there's going to be a lot of eyes on that level. So if I see buyers coming in at around 32, 33, it just seems like a no-brainer, in my opinion, to take a shot here for a rise back up to 40, 45. When we talk about volatility, we talk about big movement. And with the stock that's cheaply priced, currently at around $36, that's just icing on the cake instead of having to allocate a ton of cash for great rewards. This is, for me, just a buy low, sell high opportunity, lower risk, higher reward. It's certainly not based on political affiliations or anything like this. I'm an opportunist. And again, if I see buyers jumping in at that 33 price, I'm going to be joining them. If it leaks below $30, I'll probably let it go. But I think that there's great upside potential in this name.
So more upside potential, but if it tanks, you're out. Let's take a look at what Ben thinks about the chart. Ben?
Yeah, guys, good morning. A little bit of short-term weakness here, Nicole. After that spike up, we saw a bigger picture still kind of struggling to make its way through the middle of a very wide range that we've been in. Let's break it down. We'll look at a couple different time frames here, and I'll show you where my eye was drawn to in terms of, the downtrend, first and foremost, of the 5-minute candle chart in these areas of consolidation where the market pauses. You can see it's a pretty good example of these two phases of price development. You go from the horizontal into a vertical phase, and then you transition. It's straight up wash, rinse, repeat. I mean, sometimes more easily identifiable than others. In this instance, though, it's a pretty textbook example. A 5-minute candle chart, sell-side activity coming into play from that 54 level, basically unable to sustain that upper level, and the stops that this train has made along the way down on that path lower. Now, speaking of path lower, kind of similar pattern here, right? When you look at the big move that we saw off those highs end of March, beginning of April, up around 79, 80 bucks, high conviction, sideways consolidation, upper extreme, pretty well defined up around 60. Got a lower extreme around that 22, 23, 24 area. We'll call it 40, kind of give or take, is where the middle of this range is right now. But basically random price activity over the last few months. Yeah, we tested, we failed to break out here a couple times, but you can see that most of this has occurred around the $40 level. And let's take one more step back, because I mentioned we're in a bit of a wide range. It wasn't just since the spring of this year. You can see this stock going all the way back to the beginning of the year. Basically, again, 79, your upper extreme, lower extreme around 20, and again, struggling right now to get through the middle of this range. That's kind of what I'm looking at here. So we just saw that sell side reject that middle of the range. That's a significant area. Take one more step back. I want to show you where we are with the 50, the 200-day moving average, and here you can see we're below the shorter dated, above the longer dated. RSI not really providing a lean one way or the other, but this chart speaks to that range, that contained aspect associated price, and then again, that recent failure at a key level here right now, the middle of the range, which coincides with the 50 here, Nicole.
Yeah, another thing that we should definitely not leave out is that the company filed a prospectus on Monday announcing it would resell nearly 38 million shares of common stock. So some dilution there as well. However, in the world of social media, I mean, this has been a winner, but valuation implies higher earnings than what we're actually seeing from the company. That being said, it's a volatile trade, and you're an opportunist, right, Charles?
Yeah, and again, when we talk about extremes, this is where you're looking to be patient. The offering is what I was hoping would drive it down, and certainly when they announced that the offering is closed, the historical reference is that stocks tend to rally. We've seen that with GME in recent months. So, that's the same thinking process. If they're able to withstand the storm, they come down to technical support and hold that level. It really just earmarks that there is market demand. And if that demand is sufficient enough to hold that stock and keep it afloat above that 33 price, the news of the closing of the offering could be the catalyst to bring it right back up.
Yeah. All right, next up, Marathon Digital. Why is this one on your mind today, Charles?
Yeah, so the aforementioned Donald J. Trump, this is, it's funny to associate, kind of the crypto push recently with the ex-POTUS, but that's really what it is. He's set to speak at a major or the largest Bitcoin conference, and his VP choice, J.D. Vance, it was shared on social media that he's a hodler, that he owns a lot of Bitcoin. So, for me, this has been a very stark catalyst for crypto to rise. We couple that with the SEC news that the Ethereum ETFs are going to be approved either this week or next week. And we certainly have the ability of seeing risk on in a lot of these names. Mara is a heavily shorted stock. They're breaking through key technical levels right now, being above 25. There's not much resistance up until around this 29 level. So whenever I see these profit pockets, you either got to take on that risk and buy the near-term peak value for the, potential breakout, or you're looking for the deeper pullback. The pullback I would be eyeing around 23, the old highs, looking for the resistance acting as support, a very bullish sign. That could be a nice little risk on entry there, but I'm actually thinking that we're going to have a nice little extended breakout here.
Okay, so right now we're at 25 and change. Let's see what Ben says about the charts. Ben?
Yeah, Nicole, I say 29. We could see 34. I mean, there's energy to the upside right now, and there are fundamentals, as Charles pointed out, that are supporting this run-up. Let's take a look. First and foremost, the 5-minute candle chart. You'll see a very bullish pattern playing out, the exact opposite of what we just talked about in terms of DJT. Value's moving higher here, simply put, and we are attempting to seek value higher as we speak. Whoa, hold on a second. Let's try and bring this one back. Actually, let's just skip through into another chart. Similarly, very bullish in some ways, right? We're seeing a nice little move as we work our way off the middle of the range that's formed, trying to work our way up and through this 25, 26 level with some conviction. Taking another step back, just wanted to show you where we are, a bigger picture chart. Remember we were talking about DJT unable to find its way through the middle of that range? Well, it looks like that's what's happening here with shares of MARA, taking, again, a nice little move up here through this $25 level. Here's that high I just mentioned, 34. That was, what was that, back in the spring of this year, right around March, we topped out there, came off, but finding support in the middle of the range right now, a very bullish pattern here. Also wanted to show you where we are with the 50 to 200-day moving average because we're bouncing off of both of those. Again, that's where I'm looking at that $34 level. But definitely momentum to the upside. RSI also, look at this. We're seeing some strength. This thing's taken off, simply put. Very bullish pattern across multiple time frames here.
Okay, so more bullish than the other names we've been looking at on this one so far. Final thoughts, Charles?
Yeah, it's really difficult to play in these sectors, in particular because of the volatility. Certainly the nuance of being tied to crypto is another thing, but there's a lot of signs, there's a lot of demand, and obviously range extension is really important. And as long as that recipe is there and it continues, this stock could really get to 29, and as the aforementioned mid-lower 30s. It's certainly possible for a name like Mara. It's a retail favorite. We just got to see if retail demand continues.
Yeah, and look, we've seen a lot of the names that are related to Bitcoin doing well. Yesterday, for example, when we saw Bitcoin jumping nearly 10%, that helped a lot of these names along. I was saying how Bitcoin was up 10% and Coinbase was up 11%. And so we are seeing the group doing well. How about Shopify? Obviously, another name that we continue to watch, especially as we talk about retail sales and Amazon Prime Day. Shopify right now is up 7.5%. Some of your thoughts on this one?
Yeah, they've actually struggled at this initially 68 price, but it's the 70 mark that I feel is a key threshold for the stock to break above, because that leads to a really nice gap fill near the 77 range. A nice little 10% jumper. This is a stock that's been heavily suppressed. This used to be, again, another retail darling, but they have struggled for the last 6 months, only starting to find some life, and that was really the kind of push they needed today on that upgrade. I think that if they break 70, they're going to go and try and fill that gap. This is one of those names that offer up value for the retail with great upside possibilities. And, being at, these certainly peak levels with a lot of the major tech names, even the semiconductors, the major, big Magnificent Seven, people are going to be fishing around for value. And this is a name that's quite familiar with both retail and institutional. I love the idea of that breach of 70 and for that breakout run. It certainly could be quick. I don't think it'll be, within a day or two, but, this is another name that's got a pretty decent short interest. This is another name that getting above that technical threshold could draw a lot of attention. This is certainly one to watch because they've been getting, really hit down here off of resistance over the last few weeks while the market is pumping. And today it's really just trying to charge up and lead the way.
Yeah, and I was reading how Bank of America was talking positively about this name in the last 24 hours, talking about growth and that they've turned the corner on growth and a healthy margin. And so now snapping a 6-day losing streak and getting this 7% up move. Ben, the technicals, please.
Just trying to charge and lead the way here, Charles. It's succeeding today. I mean, this stock's on a move higher today. There's good energy associated with this, and definitely seeing some bullish activity here. I agree with Charles in terms of that $70 level would be key, but 73, 74 really opens up the door. Let's get into the rally. As I mentioned, short-term strength here, the energy associated with this move up, and I've got two areas that my eye was drawn to as I looked at this 5-minute candle chart, and then as I take a look here, it appears as if we just broke out of this range. So possibly about to establish something a little bit more sideways at this upper level, but that's what the bulls want to see, right? Higher areas of value moving higher and higher at this point, and this simply put, it's tough to argue that we've rejected these highs as of yet, coming off just barely the level that we saw just shy of 70. Again, that key level that Charles was talking about. 74 is where you really start to reverse things here, and again, open up the door for some further momentum in shares of SHOP. You could see the high conviction trade that we saw into, what are we talking about, the beginning of May there, sideways consolidation and lows into the end of that month around 56.31, but trying to regain composure here. Again, maybe not necessarily successful at this point, rallying out of this range that we have been in after establishing those lows, but still holding below 74. So let's keep an eye on, again, 70 to 75 areas, pretty key. But taking a look at the longer term, it does look like we've established a bit of a bottom pattern playing out here because values actually started to move higher off those D's 2022 lows that we saw into the end of that year and beginning of January, into January of 2023 last year. You can see, again, recently stalling out, again, around that $90, $95 level, but still holding its own for many ways. The one thing I did notice is this recent retest of $60. That was key, right, in terms of the staircase pattern to the upside. It held, built momentum through, again, 73, 74. You open up a door for a retest of those highs that we saw earlier this year. And yeah, that could be interesting. I should say, yeah, earlier this year, definitely it looks like back in January. So lots to watch here, Nicole. Definitely some momentum short term. And you can see here trying to establish a bottom.
Okay. So we'll give you the final say here, Charles Moon.
Yeah, you know, it's really outstanding and prominent that the Dow and most notably the Russell is waking up and leading the way here. You know, all year long, it's been the SPY and the Qs, most notably the NASDAQ just charging and kind of doing all the heavy lifting. Seeing growth stocks really come to life, it really is signaling to the markets that we're in a really good spot. The market is really fully anticipating these rate cuts now, and they're very comfortable putting risk on in growth. You know, obviously growth stocks thrive in lower interest rate environments, and that's really kind of the signal that's being given. I just love the upside here, and I just believe that we're going to continue as long as the broad markets continue racing up here.
Okay. Thank you for the big three today. We had some good ones. We had DJT, Marathon Digital, and Shopify. Thank you, Charles Moon of Prosper Trading Academy, and our own Ben Lichtenstein there on the charts.